Hi, I'm Dominic Picardo here for the October edition of Spreadbet magazine. Today I'm taking a look at the stock price phenomenon that is LinkedIn Corporation. And I have to say, I've become really quite a big fan of this website in recent times. It is a really handy professional networking tool. Whether you're trying to get to know new clients or get to know your contacts better, or whether you're looking for a new job, more and more people are turning to LinkedIn. And what's impressive is that thanks to the technology upgrades they've done and just the amount of good original content you find on there these days, I find myself going there on a pretty much a daily basis. To check out what's going on, which before it was the sort of thing you visited maybe once a week or less. But the impressive thing that LinkedIn is doing is persuading some users to part with cold hard cash, either for placing ads on the site or for premium access that gives you broader reach to other users. And as a result of this, LinkedIn has managed to beat the sales and profit forecasts of Wall Street analysts when it recently reported at the start of August. In compared to the quarter 1 year earlier, Q2 revenues this year are up 59%. So there's real growth going on here. But just as so far, I personally have balked at paying for LinkedIn Premium's subscription, which is 37 quid a month since you ask. I've also got reservations about paying top whack for LinkedIn's shares, at least as an investment. I mean, this stock has more than doubled in the 9 months of 2013 so far. I mean, that's a pretty spectacular performance. And as a result, I was reading this article in Forbes magazine the other day saying that in order to justify a share price of around $240 a share, this company would need to grow after tax profits for 30% compound for the next 24 years. And when you start putting it like that, it makes you take a step backwards and question what's going on. So I think the first thing I'd say is, as a buy and hold proposition, this isn't really something I'm very interested in. But for trend following purposes, I think there's everything to be said for LinkedIn. I mean, this trend is plainly upwards, and if we take it right back to 2012, you see you've got a lovely, strong long-term uptrend here. So, and what's so nice about the trend that we've seen in this year is quite frankly that you've had this lovely strong uptrend interspersed with these occasional pullbacks, and that makes it a really good stock to trade for trading purposes, because you get these pushes upwards and then followed by these retracements to very mild retracements, which allow you the opportunity to get long. And so while we have the stock in such a clear uptrend like this, I think the only logical strategy for short-term speculation is buying when the stock dips to around this pink line, which is the 13-day exponential moving average, and then buying as it rallies back through there. I mean, that to me is the only sensible strategy when you've got a price that's in this sort of strong uptrend. Still, I will admit, sooner or later, we are going to get some mean reversion here. This stock is going to come back down to earth. The monthly relative strength index, which is my sort of favourite measure of overboughtness, is up in the high 70s, and that's pretty stretched on a long-term view. When it's been this almost a stretch in the past, you then get a sort of 20% pullback. Also, we've got these valuation issues, and that's all well and good when the market's going up strongly, but when the wider stock market suffers jitters, people are not going to, they're going to think twice about owning stuff which is so heavily rated. So I think you throw in a bit of a general market nervousness here, and we could easily see another one of those 20% pullbacks at some stage. But I want to see evidence of that occurring or beginning before I even think about shorting this. Uh, you know, this is trend following, not fortune telling. So I've done some back testing, and in order to find out where the best entries are for shorting, or what has been the best entries for shorting in LinkedIn's comparatively brief history, and the answer is looking for a moving average crossover. Specifically, we look for the 10-day moving average, which is this thin red one here, to cross below this green one here, which is the 31-day moving average. And when that happens, then that's a sort of nice little downtrend confirmation. And that would be a time in order to start thinking or to enter short positions. And then you can either take profits as the price rallies back through, say, the 11-day exponential moving average, or if you've captured a large enough to move down to liking, you can try and sell at some oversold extremes. This strategy very effective so far. It's produced 9 trades, 6 of them winners, and only 3 losers.